Hey, good morning, guys. Trust you're well. All right, so I'm going to get straight into the strategy. I don't want to make it too long, the video. And then after this video, I'm going to share with you the backtesting software that you're going to utilize to actually backtest the strategy to the best of your ability until about 40 to 50 trades. After that, you will see if you understand the strategy or not, and you're going to share the results with me, okay? All right, so first things first. So we want to only take trades. Now, this is really important. We want to only take trades in the kill zone. So that means New York time, UTC -4. That's what you're going to put your time as. So you're going to put your time as New York time, and you only want to take trades between 3 and 5 a.m. So what I do is, so there's actually a session happening now. Okay, you place your, I just use this vertical line, and I place it at 3 and 5 a.m. Then you can switch to your normal times again if you want to. And then the afternoon kill zone is between 10 and 12 a.m. So again, I also put it out for the day. And that's the only times you are allowed to take trades. You're not allowed to take trades before or after this kill zone. Okay, so it's crucial that you only take trades in the kill zone. It's super important. Okay, so that's the first step. The second step of the strategy is you need to analyze the market, the structure levels to see where you would find the most liquidity. Where would the most buyers or sellers stop losses be, or where would the most orders in the market be? Because that's going to be our drawn liquidity. We call it a draw on liquidity. It's like a magnet. So the liquidity levels are important because that's where the market is on its way. That's the goal for the session. So at this stage, you can see we are displacing upwards. And for me, the biggest liquidity pool is up here. So I believe we're going to first take out the liquidity above, and then we're going to push lower to this bottom liquidity. So my plan for this session is to only take buys. Okay. So that's my plan for the session. So because I understand that there's liquidity above here. Okay. So I want to target that liquidity for this movement, and this is my movement where I'm going to profit from. Okay, so that's quite simple. Now, if we get a displacement lower, then because my bias is bullish for the session, I won't change my bias now to sells to target the low first because I understand, or from my knowledge of liquidity and my game plan for the session is we need to take out the highs before the lows. So if it pushes lower and starts, breaking structure and displacing to the upside, I won't look for buys. And I also won't look for sells. You understand? So I would only look for buys if okay, so sorry. No. So if we start displacing lower, I won't look for sells. Okay, because most likely we still, because of my bias, push up. Now it doesn't have to, it can push down, but then there's no trade for me because I'm telling to myself I'm looking for buys. So what I want to see is either a clear break of structural displacement to the upside and then get in on the fair value gap, take it further. Or I want to see a liquidity grab because there's also smaller pockets of liquidity down here, a small liquidity grab, and then a break of structure to the upside to take my trade up. Okay, so that's the two patterns because I'm only looking for buys. Okay, so that's quite important. So this is basically going to be the only variable in the strategy is, are you going to look for buys or are you going to look for sells? Now you need to understand that obviously because you're going up against the big players, you're not always going to be right with your buyers. That's fine because you're not going to win all your trades. But you need to just have a fair and basic understanding of liquidity and where the most liquidity should be resting. Because if I go just to a higher time frame, to the 1 hour, I can also see these wicks. So this wick and this wick. So that means there's even a little double top here, and there's a massive fair value gap here that most likely is going to get filled before we drop down. So because of that, I understand that there is most likely most liquidity is sitting down here. And obviously the market retraced now to this order block. So everyone is getting in for buys. But I believe this order block is also going to get liquidated before we move further to the upside because we are in an overall bullish trend. But there needs to be retracements in the market. And that's why I'm looking for buys into this sell side liquidity, okay, or buy side liquidity. Okay, so then that's the second step. So I'm going to also make a liquidity video for you guys, put it in the liquidity section of the course, so you understand how to look for liquidity. Then step 3 would be to look for a clear displacement in your favor. So let's say I'm looking for buys now. So I want to see a clear displacement. Now, displacement is just a fancy word for a break of structure or a clear momentum candle, or actually 2 clear momentum candles. Keep in mind, we are trading the 5-minute. Okay, so we're not going to go lower or higher than the 5-minute with the strategy. I want to keep it as simple and rule-based as possible, because then you guys are there's not going to be excuses for taking the wrong trades. We all should be taking the same trades, and this is if you're not consistent yet with your strategy. Okay, so if you are consistent and you understand your strategy and you're implementing it, there's no use for you to use the strategy. This is only for the guys that still wants to get consistency, and I believe it's most of you guys, um because we don't have a success story yet. So we want to get like one of you guys super profitable. Not even one, like I want all of you to be profitable, but obviously that's not going to happen, because not all of you is going to pay attention as you should. That's just the reality of it. And yeah, but I can guarantee you, because I've backtested this over and over and over again. I'm also starting to implement this in my own strategy, because I have a strategy that works for me, but this one is almost as if it works better. And it's better for my mentality and my psychology. I'm going to get to that now. But okay, so you want to see a clear displacement. So what I want to see is, usually when we get a clear displacement to the upside, there's going to be a huge impulse candle or 2 candles that's actually going to leave behind a fair value gap. And that fair value gap is going to be super important for us, because we need to take entries in that gap. Okay, I'm going to go over examples just now. I just want to briefly explain to you the different strategies. So we want to clear break of structure and displacement in your favor. If you're looking for buys, look for bullish displacement. If you're looking for sells, look for bearish displacement. Okay. Step 4, identify the fair value gap or the void. We talk about in the course about voids, but it's basically the same thing, a fair value gap. And OBs, because obviously there will now be an order block, but we're not going to take entries from the order block. We're going to take entries from the fair value gap. So identify the fair value gap in order block to take entry from with stop loss just above or below the order block. So if we have a fair value gap, for instance, here's a clear fair value gap. Now the fair value gap in this instance was this gap here. So from this candle to this candle. So this was the last candle before the break of structure, and then we have, the break of structure, and then we have a new candle also momentuming up. So now we have this fair value gap sitting right there. Now, as you can see, it didn't come all the way to the order block, and that's fine. We're not taking entries from the order block. We're only taking entries on the fair value gap. Okay, that's important. Okay, so we're only taking entries on the fair value gap, like exactly on it. Okay, and we are putting our stop loss below the order block. So what I do is I highlight the whole section. So from the fair value gap to the order block, and then your stop loss is below the order block. Okay, so that's going to be basically how your entry looks after displacement. All right, and then last step, target 2-to-1 risk reward. So that means you're targeting basically 2 times what you're risking. So I understand that for the longest time we have been teaching 1-to-5's minimum or 5-to-1's minimum, but I'm going to change that now, because I understand also that the hit rate is a lot less for you guys, especially if you're starting out and you don't exactly understand what you're looking for. So with this strategy, you're only going to target 2-to-1 R, and you are still going to be profitable. I can guarantee you. If you target 2-to-1 R, at the end of the day, it's about making money, guys. It's not about getting the best trades. It's about making money. So if you want to make money, just follow the strategy exactly as I'm explaining to you now, and you will be profitable. Like if you have discipline in the strategy, I can guarantee you will be profitable. Okay, so only target 2-to-1 R, even though the market pushes further. I'm going to show you a trade that I took yesterday. where the market pushed way further than it should have, but I only took 2 to 1, and that's fine because remember, we're only trading our sessions, and outside of our sessions, we're not even looking at the charts. You can look at the charts maybe 10 or 15 minutes before the session or before the kill zone, but other than that, you're not even going to look at the chart. There's no reason for you to look at the chart. So you're only going to look for your entries in that time frames. Okay, so that's the basic premise of the strategy. Now I'm going to actually go over and explain to you or show you some examples. Okay, so this is actually a good example, except for it wasn't in our session, so this happened a bit late. Okay, so first things first. So if we start a new day, we're going to basically mark out again 3. Let's mark out this one, 3 to 5. 3 to 5. Now, this was Tuesday. So I'm going to go from Tuesday till where we are now. So I'm going to not, cherry pick anything. I'm going to show you exactly each day's results. This is on US30, but you can trade it on Euro USD or GBP USD. Okay, so I would recommend these 3 pairs to trade it. You can go and backtest the other. I personally haven't backtested the strategy with the other pairs. I've only backtested with GU, EU, and US30. And US30 so far gave me the best results. That's why I'm going to only trade the strategy with US30. It's up to you. Again, I'm going to share the backtesting software so you can go and backtest whatever works for you. But as long as you stick to the strategy. Okay, so 3 to 5. That's my kill zone. That's where I'm going to look for trades. Okay, that's the only place I'm going to look for trades. Then the afternoon session is 10 to 12. The next day, 3. So basically 3 to 5 is going to be the London session in our time. Okay, 3 to 5. And 10 to 12 is going to be the New York session in our time. So I'm going to put the times back to SA now. As soon as I've done highlighted this. Okay, so as you can see, we're in the new session now. Okay, so this is basically 1, 2, and we're in the 3rd day now. So I'm going to go over 2 days of backtesting sessions. Okay, each session. Now you don't have to trade every session. You can actually just trade 1 session a day, and most likely you'll be more profitable, especially if your setup isn't showing up in the session. Don't take the trade, or you can work with more confidence if you want to. But basic understanding is that it needs to be in the kill zone. There needs to be some sort of bias. Are you looking for buys or sells? And you need to have a story behind what you're looking for and stick to that. Then look for clear displacement of momentum in your favor, in the favor that you predicted for the session. Take your entry on the fair value gap with your stops above or below the order block and target 2 to 1. Very basic, guys, like super basic. Okay, so I'm going to go over this example. So as soon as the session started, we already took out all of this liquidity that was resting up here. Okay, so there was liquidity here. So right before we started looking for interest, we already took out this liquidity. So in my head, because we took out this liquidity, I'm targeting new liquidity levels sitting down here. Okay, so I was looking for sells in the session, and I personally took this trade on paper. I'm not using real money with the strategy yet because my strategy works for me, but this is just forward testing that I did. Okay, so I was targeting liquidity resting down here. Okay, so I knew I was looking for sells basically in the session. So what happened was we started to trend down, but now we want a clear breaker structure or displacement before we can even look for entries. Okay, so the clear breaker structure, so the last lower high is identified right here before the breaker structure to the upside. So as soon as we get a breaker structure here, we're going to look for entries. We're going to look for a fair value gap that got left behind. Okay, so the only fair value gap that got left behind was a very, very small fair value gap, and that was sitting right here. Okay, super small fair value gap and the order block. So this whole zone here would have been your entry. Now, as you can see, we didn't even get an entry in the London session. Let me just put this back to Johannesburg. Okay, so we didn't even get a session or entry in the session, and that's fine. But the entry would have been, this is just for you to understand, right on the fair value gap, or where the fair value gap started. So it's a bit lower. Just put this block a bit lower. So right there, if you struggle to see it, just put your chart a bit up, and then you'll see it clearly. So this was the fair value gap, and then I'm also taking the order block into consideration. So I wanted to take entries from here on the fair value gap, stops literally just above. So this would have been like a 22 pip or 2-point stop loss, 2,200 pip stop loss on US30. So if you go to a calculator and want to work out for your risk management, you're going to use 2,200 pips basically, or points that you're going to put in to determine what your lot size should be and target 1 to 2. So that would have been a TP hit if we got triggered, but unfortunately it just went down, so no entry there. Then we're getting into the afternoon session. So as you can see, so after you've highlighted the time frames on UTC -4 and you go back, you'll see what times in New York. So 9 a.m. to 11. That's our time, and then 4 to 6. Okay, so 4 to 6 in the afternoons. So let's look at where we're going to find entries right here. Okay, so as you can see, we are pushing. So now what happened was, in the previous session, we had a liquidity grab below this level. Okay, and then what happened was, between the trading sessions, we actually pushed above and broke structure above these highs. So now we're in a clear uptrend. We can see we're in a clear uptrend. So buyers for this session definitely can be buys. Okay, there's like, you can look for buys in the session, but now we need another clear displacement and to show us that we are actually pushing to the upside. So clear displacement for me would have been, again, okay, so we created a higher high, higher low, higher high. Then we pushed into this fair value gap and didn't create a new high. So we were coming from this level right here. So once this got displaced and broken clearly, so you can clearly see super bullish engulfing candle, like you can see the intention of the market is bullish. It's not like it's doing a liquidity grab where it's just a wick and then this bearish engulfing candle. Okay, so right after that, we created a fair value gap. Okay, so the fair value gap would have been this little gap here, but we're going to highlight the whole order block, and that would have been your entry point. Okay, so entry again on the fair value gap right there, stops below the order block. So this would have been a 40-point stop loss. So it seems quite big, but remember, we're only targeting 1 to 2. Okay, and then you target your 1 to 2, and that would have been a clear TP hit. Okay, and quite fast as well. Okay, so now the first session we missed a trade, so no negative trades. The second one we up 2R, so we're risking 1%, we're up 2%. Okay, then we go to the next session. Okay, so in this session we were looking for buys. Okay, so the reason why we were looking for buys is because, again, there's liquidity resting above this high here. So I was expecting that liquidity to get grabbed before we sell off. So I was actually expecting a sell off, but before we have a sell off, we're pushing into this, and this was yesterday. So again, what we're looking for, we are trending down before the session. We did do a small liquidity raid of this low here before breaking structure to the upside and clearly displacing. Okay, displacing, breaking structure to the upside right here with these candles. Actually, we already displaced here, because remember, this is a little downtrend, lower low, because we grabbed liquidity. Now the market could have kept on, but it didn't. It pushed above. So this was our clear displacement and breaker structure. So right after that, what we are looking for is fair value gaps. Now, we didn't see any fair value gaps in here. The only one we saw was with this candle, and this was the actual displacement candle. So we got a fair value gap right here and here. So this was our fair value gap, but we are taking the order block in consideration. And this was our entry point. And so as you can see, after this place, it was like 5, 10, 15 minutes. And then we got to tap into our fair value gap. And this would have been the entry. Stops below. This would have been a 17-point stop loss. And targeting 1 to 2. Okay, right there, we would have been out of the market already. Okay, so very simple, guys. And actually, this trade, if you look at it with the fundamentals that came out yesterday, if you decided to hold the trade, would have been a massive trade, like a 1 to 10, even more, 1 to 15, massive. But again, we're not getting negative, missing these moves because we're sticking to our edge. Okay, we're sticking to, because this might as well just dropped as well. So we don't know. We never know what's going to happen in the market. We're just sticking to our edge. Now, the afternoon session also didn't give us an entry, so I was looking for a pullback in the afternoon session. So I was just waiting for this last low point to get displaced and broken, and then I was looking for entries, but it didn't give me an entry. So as you can see, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So at this point right here is our last higher low. And then I was expecting that to break. And once it broke, I was looking for my fair value gap. My fair value gap was sitting right here. And as you can see, it's all in the session or in the kill zone. And that unfortunately did not get filled. But that would have been my entry point with my stops above the order block. Okay, so I was looking for entries right here, but it came close, but it didn't trigger me in. 50-point stop loss, and I would have targeted a 1 to 2. Unfortunately, that didn't get triggered. But again, now we only had 2 trades that actually triggered. Let me put this in. We only actually had 2 trades that triggered, but both of them are winners. And the other 2s that didn't get triggered, that's not losers. So we are basically up 4%. And 4% in 2 days. So that's incredible results, guys. And now we are in the new session. So let's see what we can look for in the session. So we don't have, we had a displacement here now, but no fair value gap yet to the upside. So there's no entry yet in this session. So what I still want to see is a clear displacement to the upside, leaving behind a fair value gap. And then it needs to be worth it. It needs to at least give me a 1 to 2R into this liquidity pool here. Otherwise, I'm also not going to take the trade. Okay, so let's see what happens in this session. But that's the basic premise of the strategy is, guys. It's super simple. It's, again, I'm going to go over it again. Mark out your kill zones, analyze the market structure, and identify what direction you want to trade for the session. There needs to be some sort of drawn liquidity. Either it can be a extreme high or low point, higher time frame, higher low point, a higher time frame fair value gap that you're targeting. Just build a story around what you're looking for, buys or sells. And even if you're wrong with it, it doesn't even matter, because if you stick to your strategy, it's probably not going to go in your favor anyway. So there's not going to be an entry for you. Okay. Then step 3, look for clear displacement, break of structure, momentum candles in your favor, because that's the only candles or momentum that can give you fair value gaps to enter from. So look for that. Then identify your fair value gap, your void, and your order block, and take your entry on the fair value gap. Super important. Take entry. Let me just put it there as well. Let's void an OB to take entry from, but I'm going to say identify void to take entry from. So you're going to take an entry only from the void with stops above or below the order block. Okay. So you don't get confused there. And you only target 2 to 1. Only target 2 to 1. You want to get consistent results. You want to get your win rate more than a 50%, because then your mentality is also going to be better, because obviously a lot of you guys don't like to lose. So if you lose more than you win, your mentality starts draining, and you start making stupid mistakes. And with this, you can't really make mistakes because you can only trade a certain session and you can only look for certain stuff, and it's very rule based. So please just follow these rules. Okay, guys. Hope you understand it. Now, up to the next video, I'm going to share with you the backtesting software and how to utilize it, and then start backtesting. And as soon as you get to 40, 50 backtest, please share with me the results. Okay, I'm going to tell you exactly how to share the results of the backtesting. Thanks, guys. Enjoy. Let me know. Cheers.